Airline stocks losing some altitude in December with the ETF that tracks the space falling nearly 8%. But Raymond James says that investors should be building positions on pullbacks in names like Delta and Southwest into 2023. It is today's MVP, most valuable pick. Joining us now is the analyst behind that call, Savanthi Syth. Savi, if I were to look at this idea that Delta and Southwest are better positioned into next year, it would strike me that maybe you're not that enthusiastic about the overall industry, right? They seem like they're the higher quality, better balance sheet plays within the group.
That's fair, Mike. You know, what I would say is there are still some headwinds. But one is there's a lot of labor cost inflation coming on next year for the airlines specifically. And you don't know what fuel's going to do. And I think the biggest unknown is what demand does. We believe that demand's going to hold up better than the rest of the industry. But given like all the headwinds that we have here, I think it's better to pay quality here, even though we see kind of upside for the group in general. I think the better bet for investors is to go with quality.
The demand side is an interesting debate, I suppose. But you can easily envision us, spending next year talking about, well, the comparisons were very tough. Everybody got their pent-up travel out of the way back in 2022, and the demand has been so strong here. On the other hand, wages are what they are. Maybe businesses come back a little bit. So what are your current expectations for how demand looks next year?
Yeah, that's exactly right. When you think about, clearly the Fed is trying to create some slowdown in the economy. And usually airlines are, early cycle, very cyclical stocks that you don't want to play heading into a slowdown. But what's different is we are coming off of a pandemic where not all the demand is going, back to upper levels. And so there's still some demand coming back online. It's large corporates, it's international. So there is some opportunity here. And I think the biggest thing that we point out to is domestic revenue has historically been fairly steady, about 0.7% of GDP. And right now it's showing up at around 0.5. So even if GDP kind of comes down or doesn't go up as much, there is the opportunity for airlines to narrow that gap and really outperform the other sectors.
And with a name like Delta, aside from the fact that it does seem to have, the better balance sheet and, the franchises perform well, is there anything else in terms of, the routes and exposure to different markets that make it attractive?
Yeah, Delta, you're right. They have a good balance sheet. They have taken on leverage and they've been deleveraging, but they didn't dilute shareholders during the downturn. The other thing that does help Delta is exactly to your point that they have a lot more international exposure and long-haul international exposure. You saw transatlantic come on nicely starting the second half of 2022. So I think you see a full year impact of the transatlantic really coming back. And the Pacific is starting to open up. China's still a big question mark, but you have other countries that are starting to open up. And so I think those will be nice tailwinds for Delta next year relative to some of the domestic players.
You mentioned we obviously don't know what's going to happen in the way of fuel prices, but when it comes to other margin drivers, things like employee, wage costs and things like that, have things changed on a longer-term basis just because we're dealing with a worker shortage and they were kind of scrambling to get back in the air?
Yes, capacity is definitely being constrained in the industry because of what's happening on the the pilot training side. I think on the other employee side, airlines have caught up. And the other thing on capacity, the airlines would be flying a lot more today. I think there's enough demand for a lot more capacity today than what we're seeing. And it's because we are having kind of supply chain issues where OEMs are having a hard time, Airbus, Boeing, having a hard time delivering aircraft on time. And even when aircraft come off for maintenance purposes, they're taking a bit longer to come back on. So capacity is definitely constrained. But I think there are other things that have changed too. I mean, I think there's a lot of more premium purchasing going on, just having more premium products, more choice for passengers to buy up to an experience that they would like to have. I think all of that is kind of creating a stronger revenue environment. If you look at fuel as a percentage of revenue, it has over time for U.S. airlines come down. And not just related to the cost of fuel. So I think there are some positive trends where some of this cost can be absorbed by airlines, especially those with premium products.
I think it was last week the Southwest CEO was saying that their main constraint is the training programs for new pilots and things like that. In other words, they can't process enough people to maybe add capacity. What does that mean for just ticket pricing? I mean, you suggested that people are willing to pay up for maybe some premium perks and things like that. But would you expect prices to just remain elevated because of all those factors?
Yeah, I think the good news is that you're probably not going to see it go up a lot more, in my opinion. I think capacity is coming back online. It was really constrained. I think peak constraint was probably in April, May of this year. And we've started to catch up, especially on some of the other employee groups. On the pilot group, we're still, playing catch up in some areas. But as we head into next summer, I think some of that will be caught up. And as we move into the second half, I think the constraint will be less on the employee side and more on the kind of aircraft side. So ticket prices probably stay elevated. What fuel does will matter as well. But generally, we're probably not going to see a lot more inflation, but maybe prices holding up fairly well here.
All right. Well, price targets for Southwest, $48, Delta, $52. Savi, appreciate you walking us through all that. Thank you.